Hello everyone, welcome to the channel FinNews Digest. Today we are gonna see the high value transactions. That is, these are the cases when you have to file the compulsory return, or we can say the mandatory return, even if your that is to say even if your income is below the exemption limit. Okay, let's start. First of all, this was brought by our finance ministry Nirmala Sitharaman in the previous year in the budget 2019, and it is applicable from April 2020. That is to say, if you have incurred any of these expenses during the previous year, that is from April 2019 to March 2020, then you will have to file an ITR. Even if your income is below the exemption limit. What do I mean when I say exemption limit is, if your age is 60 years, or if your age is below 60 years, then the exemption limit for you is 2.5 lakhs. And if your age is 60 to 80, less than 80, then exemption limit is 3 lakh rupees. And if you are 80 or above, then the exemption slab that have been provided for you is 5 lakh rupees. That is, in all these cases, that is 2.5, 3 lakh or 5 lakh, you have to file an ITR. Okay. Now, first of all, let's see why this rule was brought. This rule was incorporated because many a times it has been seen that there is a mismatch between the income that is declared in the ITR and the expenses that have been incurred. So, to catch these tax evaders, because many tax evaders, this rule was incorporated. Okay, what happens is that people purposely, deliberately divert their income, showing that these are the expenses, and they claim these expenses as business expenses, and while filing their ITR. Therefore, to ensure that people who incur large expenditure do not escape from paying tax, this provision was brought. Who are the eligible person under this rule? Is individuals, that is company and firm, other than company and firm. Okay, other than company and firm. So who all remains as individuals, HUF or association of persons, body of individuals. They'll have to, if they incur any of these transaction, they'll have to file ITR. First is, if they pay an electricity bill of rupees more than 1 lakh during the year. Okay, electricity bill of more than rupees 1 lakh during the previous year. And here the electricity bill is based on the consumption. Okay, whether it is personal or commercial business, irrespective of the purpose for which you have incurred, you'll have to pay if it crosses the limit of 1 lakh rupees. And even if you have more than one connection in your name, all the expenses, consumption expenses, shall be aggregated to determine the limit of 1 lakh rupees. Okay, for example, for example, Mr. A, in our example, has a bank interest in a salary which is less than 2,50,000, and he has incurred an electricity bill of rupees 1 lakh. Although he is falling below the basic exemption limit, that is 2,50,000, he will have to mandatorily file the ITR for the financial year 2019-20 in ITR 1. Okay, a separate column has been provided, and he'll have to disclose that he has incurred more than 1 lakh rupees electricity bill. Now next is incurred an expenditure of rupees more than 2 lakh for travel to foreign country. Okay, but in foreign country, neighboring countries have been excluded. Our neighboring countries being Bangladesh, Bhutan, Maldives, Nepal, Pakistan, Sri Lanka. Or even if you perform these journeys for a pilgrimage like in Hajj, these are also excluded. And also the provision states, if the travel is for more than 1 lakh rupees, it is for self or for any other person. Okay, that is to say, person who has incurred expenditure may not travel to the foreign country. Okay, also, irrespective of whether it is for business purpose or personal purpose, you'll have to file ITR if it crosses the limit of rupees 2 lakh. Now next is, if you make a deposit of more than 1 crore in one or more current accounts. Okay, so what we have to see is whether the account is a current account. If it is a savings account, it is not considered in this provision. Okay, it has been excluded from this provision or any other account. So only and only the focus is on current accounts, and the amount is, the limit is more than 1 crore rupees in one or more current accounts. Many times business has more than one account, so aggregate of all shall be considered. And whether this transaction has been have been incurred in cash or check or online fund transfer, whatever, it doesn't matter. We'll see. And also, to see the threshold, as I said, all the current accounts and all the banks, including cooperative banks, should be considered for determining the limit of 1 crore, more than 1 crore. Now next is I hope all this is clear. And now next is sixth provision, section 139(1). Again, it is applicable to all other than company and firm, so individual, HUF, AOP, BOI. And first, let's understand what does the old provision said. Old provision stated that any person who claims the benefit of exemption, that is from 54 to 54 GB, there's a section in under the capital gain, not required earlier. If you have claimed the exemption, and after claiming the exemption your income did not exceed the basic exemption limit, then there's no need to file ITR. And now the new provision states that under the Finance Act 2019, if the income before claiming the exemption from 54 to 54 GB is more than the basic limit, you'll have to file an ITR. Let us simplify it with an example. If Mr. A has a gross total income of rupees 1.5 lakh and he has a capital gain of rupees 2 lakh, is made it by selling his house property. Okay, and the total income 1.5 lakh and 2 lakh becomes 3.5 lakh. Okay, and suppose this is an hypothetical example, and suppose he invested it in 54B. Now after invested how much, 2 lakh rupees. So from 3.5 lakh, that is our total income, deducting 2 lakh rupees that we have invested in 54B, that is capital gain exemptions. Now what remains is 1.5 lakh rupees, and it is below the exemption limit for an individual who is less than 60 years. The basic exemption limit for him is 2.5 lakh. Okay, now income, as I said, 3.5 deducting 2 lakh that we have invested, remains 1.5 lakh rupees. So as it is below exemption limit, you don't have to file an ITR. Now what does the new provision states? New provision says that if the income before claiming the exemption, okay, under section 54 to 54 GB is more than the basic exemption limit, you will have to file ITR. Suppose now, taking the same hypothetical example, gross total income is 1.5 lakh and capital gain is 2 lakh. Total income is 3.5 lakh. Now this total income of 3.5 lakh shall be taken into account. As it is exceeding your basic exemption limit, you will have to file an ITR. Earlier, to conclude the basic differences, earlier it was after the exemptions, capital exemptions, okay, after investing deducting the capital exemptions, and now it is before claiming the exemptions from 54 to 54 GB. This is how the provisions have been changed. If we talk about the documents, while filing ITR, you actually don't have to show any proof, but that is not important. That if department asks, then you'll have to provide, and it may ask for a record of up to 8 years if there is no foreign asset. If you have any of the asset outside the India, or any financial interest in any entity outside the India, and if there is a foreign asset, then the time period is for the 16 years. So do keep the records for last 8 years or 16 years as you fall in any of the categories. I hope the provision is clear to you, and if you find the video helpful, do like, share and subscribe. Thank you.